Just, yeah. So going through the update for this quarter, we are joining our MS team, and hopefully the rest of the audience are having easy and efficient communication, and flow of connection is not hampered or troubled with the Wi-Fi or the connectivities. If there is anything, please feel free to report it to the emails at the end of this slide, so at least we can improve on the connectivities. The regular, as usual, the disclaimer for the information and the opinion presented in these documents doesn't constitute any investment advice and the financial or any financial recommendation. You need to carry on your own due diligence and the professional seek of comfort if decision to be taken. So from Oman Cement side, we have on my right hand side the CEO. Unfortunately, the camera is not working. I'll open it from my side of the laptop. So Mr. Yapping on my right hand side. Hi. And next to him is our board secretary, Afnan. And next to the other side, we have the financial controller, Manish. And we have the budget and cost controller and the FP&A's Ganesh. In this session, we will cover the following items on the OCC PAX continuous, which is we are holding it to deliver to the market, and on the H1 2024 results. Then we will have a session on the Q&A and the contact details. We continue to lead the cement industries to comfort on the concrete values to maintain the sustainable supply to the local industries and the infrastructure and development, both on the projects, mega projects, mid-size, and retail side. We maintain the brand quality, not compromise. We are acting with the license to operate in an environment-friendly way, as we have been operating over the years, with a full center of attention to all stakeholders in this ecosystems. And continue to build on the relations with the community and develop the further values maximization to shareholders by all strengths that have been developed over years, taking the opportunities on any single events that we can just catch, even with this strategic partner, and developing pillars for the in-country value and help the construction industries to foster at whatever speed that we can just push to it. On overall, if we compare the current or the Q2 cumulative H1 to H1 of last year, you will find all the quantitative parameters once it comes to the clinker productions, cement production, and the cement sale have marginally improved, with the clinker improved almost 0.5%. And the cement production improved around 2.4%, and the cement sale marginally adjusted to 1.74% according to the market lifting itself. One highlight towards the statistics or the quantitative results. We as a management, we are stretching our target. Budgets are higher than this. Market, unfortunately, is not delivering the top expectation as we are seeing it. If it comes right and the lifting moves in a high level as we put to the budget, then the parameter will be changed, and we will give you some highlights toward the end of the slides on the financial parameters. Mainly, if we go concisely on the performance over the years, you will find it's positively trending, and please be mindful to read this one as H1. These are annualized figures from year on year, and only this H1 is a 6-month period. So you will find from the year 2021 onwards, we are going on a positive slope once it comes to the revenues. Once it comes to the EBITDAs, they are up and down only for specific reasons. Once it comes to writing off or impairments of specific projects and adjustment of shortfall of clinker after the acquisitions, for the inventory after the acquisitions. Once it comes to the H1 results, we are expecting to interpolate these results to deliver 18.8 million in the EBITDA's results, and on the revenue we are trying to see this almost in the circular of 70 million plus, estimated to be delivered by end of the year. Once it comes to the net profit, we are expecting whatever has been delivered for H1 of 6 million to be quite interpolated to almost 12 million circular. This is caveated and conditioned that all market conditions maintained the sustainable trend or positively upwards. So if it is higher than whatever we expected in the forecasts, then these figures might be positively upwards sloping. On the net profit, we've highlighted we will be better than last year. If you take the last year number, it's almost 6 million. But if I take and add back whatever we hit of impairment last year was around 4.5 million. So this will be almost 10.5. And we expect to exceed that by almost like 15 to 17% if we deliver the value as whatever we expect. And overall, once it comes to the performance of the share price, you will find that we have almost comparable to the last year. Last year, same period closing was 355 roughly basis per share, and this period 400 basis. So that appreciation of 13% reflected from the market feel and the perceptions was reflected in the stock performance over the past period. With that, I would conclude for a Q&A session. And if you have any question, we are all ears. We plan to have the session more of interactive. So at least if you have any discussion points, we are available to answer. And we'll for Q3, we will give you further concrete progress as we move with the stakeholders on specific milestones projects that we have pronounced, and we put it on our financials once we publish the results. Audience, please. Afnan, can you mediate, please?
So do you have any questions?
Let me close from my side, please. Yes, carry on.
Can you just please raise your hands? Yeah, so we can't hear anyone. Okay, Mr. Abbas, you can please go on.
Good morning, everyone. Thank you very much for the call and for the brief but very informative presentation.
Mr. Abbas?
Yes, can you guys hear me?
We can't hear you.
You can't hear me?
Audience, can you please confirm if you can hear Mr. Abbas over the chat?
Hello?
You mute from your side.
Can you guys hear me now?
Yeah, Abbas, I think we have a system glitch on over Afnan laptop, so you may speak. I put my laptop over here open. So
thank you.
Come again, please.
Sure. Thank you very much for the presentation. Just a quick one. Can you talk about the trend in realization prices? You know, what sort of market are you seeing in terms of, is there an opportunity to sort of increase that over the next 6 to 12 months? You know, what are the basic trends? Can you just speak a little bit on that side? Because I see that you guys have fantastic cost control. Obviously, the company is doing well. I'm just trying to see what sort of upside opportunity are we seeing in this company in the next 6 to 12 months and in the sector, obviously. Yes.
Okay. Let me bring one slide from the presentation. I don't know which I made it ready for such question. Can we go back? Where is it now? Can you see the slide?
Yes, I can.
Yeah. So if you can see the slide, we have adjusted the price towards the start of last year, 2023. which has made a good saving for the last year performance. Unfortunately, the current year is still faced with the no protectionism or happens on towards this industry once it comes to the imported material to the country, either clinker or cement. And we are faced with the competitions once it comes across the border on the price. Unfortunately, we lost 0.5%. Even if I say 0.1 is a loss for us on the net sales realization. And this is because of this kind of price war. Few of those challenges are prevalent on the north. The major saver that we still have the populous area that we service our customers with an arm length reach and available to continue the supply with loyal customers who have been with this company, yes, on a long-term relationship with a specific incentivized program. So we will maintain our position wherever we try not to erode net sales realization significantly, but with a bit of margin improvement on overall if we move away from cost containment or cost optimization initiatives. So this story tells the facts of the over years from 2015. We have lost significant value of almost like 4.5 riyals, but not lost totally outside, but only to the customers. So customers will take that advantage, or the distributors in the mid chain, and pass it to the end user. So this is the trade between buyer cycle and seller cycle itself. Hopefully, if the market revives and the project that the government announced comes not just only in the pipeline, but comes to be quite actually to break the ground, then we may find the momentum moves and we will adjust accordingly. In the H2, we'll highlight further around the movement from the prices. So we keep you posted on the performance forward. Thank you, Abbas.
Thank you for that. Just another question. I noticed your discounting, typically that's ranged from, 4% to 6% over the last many years. And even last quarter is around 4.5%. When you give your revenue, then you give a less discount, number, and then you come with the net revenue. So this quarter, the discount was a very minuscule 0.88%. Is it just a very quarter specific event, or is that a concentrated strategy from the company to not offer the discounts?
We continue our kind of focus strategy with the concentration on the major market and the loyal off-takers, because we have a specific mix which we are all adjusting once it comes to the contracted quantity versus the spot and open market sales. And this is dynamic. Once it comes to see the variable forces coming, either impacting us, even if we find some of the big customers being quite, I will not call it snatch, but approached by other competitors, we'll find our kind of maneuvering to maintain the market and we don't lose the leading side in this north area.
Got it. And in the last call, you spoke about your de-bottlenecking and capacity enhancement, and you said it's going to be completed by the third quarter of 24. Can you comment on this? And you didn't really guide in terms of what the number would be in terms of benefit to the company, but you said that it's going to help you guys. I mean, obviously you're closer to completion of that. Can you talk about this de-bottlenecking and capacity enhancement initiative, and what sort of impact do you see on the bottom line, let's say for 25, thanks to these initiatives?
See, some of those de-bottlenecks already realized since the last year. Further improvement in operational efficiencies are being done with the team being quite supported by the performance booster team from Khawashin, the strategic partner. Two main initiatives being quite put in our strategy for this year. One has been quite pushed to be delivered next year, and the other one is in the final tendering stage. If things move, so in the Q3, which is current period, we'll come to announce the successful bidder and the update on this timeline. We are trying to crush time, so at least this project specifically starts within the year if possible. If this mobilization and lead time of the equipments get to be quite approved by the board and accepted by the successful bidder to deliver it in no time. We are trying to finalize this hopefully within this period, and we'll come with a further highlight towards this. But all in all those parameters will definitely give us a lever to really improve on the spread wherever we can talk to the market, speak to the market, comfort the market once it comes to the price adjustments slightly, but not that significant that we erode margins big time that impact us because for us, we are moving on our parameters on our KPIs, the net profit, the EBITDAs, and the cash flows. And our return on asset and return on equity is very important that we keep them in our corporate KPIs and we monitor them very sensitively week on week, month on month, and quarter on quarter, and come to H2H and then year end as results. As also management are tagged in their performance assessment towards those metrics. So this is a vigilant, tactical, on daily basis move towards delivering maximized value.
And I appreciate that. I've seen that in your numbers as well. So fantastic performance over the last few quarters. My last question, and maybe if I have more questions, I'll go back in the queue. I always,
yes,
it's always good to hear from you guys regarding the competitive sort of dynamic in the market in terms of what the imports are. We keep hearing about, Oman, the Omani government putting some quality checks at the border, possibly, because we can't, it's a customs union, so we can't really put any explicit tariffs. But our quota, so we try and sort of enforce certain standards. But generally speaking, I don't see that has had a massive impact on imports. I mean, imports still continue. The prices are obviously favorable to them. What is your, if you had to sit down with the regulators, with the governments, what is a pragmatic sort of approach to deal with some of these lower quality imports? And how do you see the imports coming into the country from a quality perspective, and how is it affecting the industry? No, this is just a general question to hear your views on the topic.
See, on tactics to approach regulators is not about regulator per se or authority. Yes, we are vigilant to monitor our kind of peers and competitors. And once we say peers, we bank on Raisut and other grinding mills here to deliver collectively all together that we suffice supply to demand in the country. And once it comes to the competitor, we work as usual in an open book approach that we want to create sustainable supply to demand with no impact. And even we open the door for partnership on either technical support, either in inventory support, if it comes within the economical best terms for both parties. So such discussions are ongoing. We cannot pronounce all the, these interactions in a high level yet till we just materialize on a specific output results. Once it comes to the quality conformity charges has been leveled down from, I believe it was 182 per truck, 182 riyals per truck, and then being leveled down to 50% of the charge around mid of the last year, and then being quite waived or removed, which is making us in a world of free trade zones as across the GCC, across the oceans once it comes, and maybe small, I will not call it tariffs, but charge for the other borders, not Omani borders, wherever maybe charging maybe 5 to 10 riyals per truck for the imported items, either being cements or else. So the depriving increase in cost of delivered material to the land here in Oman is not that much existing. It's not deprived, it's not pushed back. So if that quality conformity charge comes to be playing again as reinstated, then it might toll a load on the delivered competing price once it comes to the market of delivering cement to Oman from the neighborhood countries. You've asked about the quality. Quality we are assessing. In some instance, we find quality subpar once it comes to the competitors or the inwarding. Sometimes they are within the range. So the point of this cement standards, as similar other standards, you will find mini-max. So hopefully we don't wish even any inwarding or even competing partner to bring any quality below the standards, because this is also compromising the constructions and the well-being of all those buildings and the infrastructure, as well also the safety of people. We don't wish to be quite below bar. but we've seen in specific instance because we have our own lab and we do solicited testing to see how we can just also speak and talk and compare. However, we continue to vigilantly monitor our quality and other peers and other competitors' quality and see how we move to comfort by providing service advice to even our partners, being the ready mix, being the construction companies, being the lifters. So we speak to their quality managers on these labs. We speak to their requirement, to the consultants. So we have this open service support to the clients as well. So Abbas, hopefully I didn't.
Thank you very much. Yeah, thank you so much, Fatik. And then I'll wait my turn in the queue. I have a couple of more questions, but sure. Let's get someone up.
Sure, Afnan.
Okay, thank you.
Makesh, please.
Yeah, hi. Thanks for the opportunity. Basically, I have two specific questions. See, one.
Makesh, can you just speak up, please? Can you speak up? Your voice is a bit muffled.
Is it fine now? Is it better?
Kind of. Yes, please come in.
Yeah, okay. See, basically, I have two specific questions. One is on your extrapolated P&L profits for the year. So you're saying that it will be around 12.5 million. But if you look at the interest income, in the first half, it was...
Sorry, Makesh. Sorry, Makesh. Could you come back? Could you come back? Because I lost you for a few seconds. Could you come back? You said interpolated, then you chopped off.
Yeah, so... if you see the total profit for FY24, extrapolated profit for 24 is around 12.5 million. But if you look at the interest income, for the first half, it was 1.2 million, which might not accrue in the second half, given that dividend payouts have happened. So how do you intend to make up for this difference? Hello?
Yeah, I hear you out. I've listened to your question. Valid Pulse, we use this tactical for creating non-core profit during the downturns. And now we are trying to capitalize on the operational efficiency to bridge this shortfall on the operation profits or cash flow generated from the operations. And I usually call it, you will find it in the accounting term OCF abbreviated, but I usually, to change position of the letters, I call it the CFO. So the CFO is very important, the cash flow from operation, and the profit from operation is mainly now the focus for our move forward to concretely create this marginal positive growth. And we will give highlights further down the year once it comes to the non-core profit. We have submitted specific requirement to the approval for the approval side. If that moves, then maybe I would call it sluggishly. It will come closer to whatever we are trying to deliver for the remaining part of the year, but it will not be matching.
Hello.
Yeah, Makesh, can you hear me?
Yes, I can hear you. Yeah. I can hear you loud and clear. I think you're on mute, Mr. Fatik.
Speaker is always. Sorry, we have a system glitch. The IT is trying to help into this. Thank you, Ahlam, for saying the resonance. Is it coming now with resonance or not? Please, can you just confirm?
No, it is loud and clear. Not a problem.
I'm clear and loud. Can you hear me? Yes, thank you.
Yeah.
Thank you, Ahlam.
Yes.
So on this interest income, we might not deliver whatever was in the previous year. One factor is also expected this interest rate revision once it comes to the Fed and the CPO adjustments. But also one factor which we have seen from the market, that market is flooded with liquidity. and there is no much, I would call it demand wherever the rates can be maintained. So this might not be very positively compared on the previous period once we get to close the year, to give a fair update. Makesh, thank you. Any other question before we move to the rest of the audience?
Yeah, just one more question. So see, basically we had two main projects. One is debottlenecking and the other one is alternate fuel that you are planning to implement. I would like to understand what would be the
Nitika?
CapEx for these two.
So Makesh, I believe we've already attended before we move. I cannot hear you. Can you come and speak up?
Yeah, is it clear now? Sorry.
أنا بالنت عندي.
Hello.
Sorry for this technology glitch. Now I am back to my laptop because we wanted to use this room, the meeting room sound system, but it's not working right. I regret the inconvenience caused. Makesh, come back, please.
Yeah, sure. So basically, we had two projects. One is debottlenecking, the other one is alternate fuel.
Yeah.
I mean, I understand that for debottlenecking, you will give more details by 3Q of this year. I mean, which you had just alluded to. And on the fuel project, I would like to understand the timelines. Earlier, I think it was expected to be completed by 4Q. And what will be the capex for these two projects, and what is the payback for these two projects? If you can highlight that, it will be great.
That's quite a nice articulation, gentlemen. On the alternative fuel, we have the tire ships, and we are moving on other alternative fuel sources. We created a specific unit after this challenge on the supply of specific material, which is the tires. And we arch also a discussion with the authorities on how this can be quite regulated for more of an efficient circular economy that can support all the stakeholders, among which Oman Cement. This is one part on the alternative fuel. The other part on the alternative fuel, there's this major projects which we are currently working with the different stakeholders, mainly at the shareholders levels. And a few sessions of meetings have happened between shareholders of different interest. Once this final terms are agreed, we will come to the final constitution of the framework of this legal partnership, and we come to the market hopefully within the Q4 itself, because we allow this Q still as a working level for the DDs, and the approach on the movement has been directed, and we will come with a highlight hopefully within the Q4. If things moved on the Q4, we would require around 10 months, boss. We take around 10 months from the Q4 if we sign to get this specific project up and tested and commissioned in the 2025. So we foresee hopefully as a Q3 to Q4 of 2025, this will play a significant role of reduction of cost. And further, we are not just doing it for margins or cost, but we are doing it more from SDGs, ESG sustainability role and environment-friendly protections. Because one of the pillars that the strategic partners and Oman Cement is saying, act in an environmentally practices, and we cannot compromise. So we want to create the green cement. We want to create low carbon emissions in our decarbonization pact towards the commitment the government is giving in 2040. And we are updating, for your information, our decarbonization plan accordingly. So once it comes to the final progress with the other authorities and shareholders, we'll give highlights to the market through news and through engagement with you, gentlemen and young ladies. Thank you, Makesh. Any other question?
Thank you, sir. Thank you for your response. All the best.
Thank you. Nitika,
yes, hi, good morning.
ears,
can you hear
please.
me?
Very well, clear and crystal sound. Come in, please.
Great. Yes, hi. So, good morning. First, could you just speak about the current capacity utilization levels, how it was versus 2Q24 compared to first quarter 24? Our back calculation leads us to believe that there was a slight dip. And what are the trends you're expecting for the rest of the year?
See, technically my CEO is next to me, but I'll give you high-level inputs. We faced few specific bottleneck improvements once we just wanted to enhance the capabilities. And these are unplanned trips, which has affected us for specific outages that fall into the period in the Q1 and Q2. And a few of those in June has impacted our kind of availability, specifically in a major clean. And we are now maintaining this in a very robust side, wherever even we called for support of expert matters to come and try to see how we can hasten the availability to be quite around the 100%, hopefully, and then utilization to a higher capacity rather than 90 to above the 95 to the 99 and circular to the 100 if possible. Nitika?
Yes, okay. And so in the last call, you'd also mentioned about minor shutdowns in August and September. So should we, how should we think about it? Will it result in further decline for the rest of the year in terms of capacity utilization?
Now, Nitika, for August, we have already surpassed that because we had that unplanned shutdown, and we have tweaked it, which took over June and July a bit. So mainly it will come with a one shutdown. If the expert matter can push it into the next year, we'll take it positively. But we see the performance of the year to be delivered even with that planned shutdown towards the Q4 of this year. So we don't worry about the availability and utilization. We are available to supply to market if market comes with a positive trend. We have our maneuver and levers. And over to you.
Okay, great. So just following up on the question on realizations, how do you expect it to pan out in the? I'm sorry, I've missed that if I missed that. So how do you expect the realizations to pan out in the next next few quarters, next couple of quarters?
See, this news, I would say maybe it's should be quite published in next coming few weeks. We are coming with a bit of update to the market. Maybe you have seen that we are soft launching a specific product. And that product, we might attract a specific differentiated segmental prices that can be preferential on margins. This is one part, which if then we have a market appetite and confirmed interest, then also the repricing of other products would be reflected in H2. That can give us a bit of comfort on the lost 0.5% as of year to date in H1 2024.
Okay, understood. Noted. Thanks.
Thank you.
Thank you, Dr.
Thank you. Yeah, Afnan is asking if there's any other question, please.
Can I ask my remaining questions, or is there someone else in queue?
Alan, Ahlam, anyone from the audience, and then this iPhone and Verified, and then Emal Belushi. And if there is anyone else who would like to bring a question before Abbas comes back, please. Abbas, you may come in, please.
Thank you, Fatih. Fatih, I was just looking at you mentioned OCF or CFO, and then I was looking at your depreciation of close to 7 to 8 million riyal, which is non-cash. So this year you should generate between, in my opinion, 55 to 60 paisa in cash per share. If you look at the 12 million sort of real profit that you're expecting, and you're also sitting on 15 million reals of bank deposits. So there's a pretty substantial sort of cash flow coming in. I wanted to tie that these numbers to one, your dividend strategy going forward. I mean, I know the company was very generous in this last cycle, but also going forward, if you tie this to your capacity expansion or cash needs that the company needs to, let's say, grow versus what you don't really need, so what sort of dividend strategy are you looking at pursuing over the next 2 to 3 years?
I think you and Ahlam synchronized together that you posed me the same question, and I was even put the mic mute. I say the gentleman will ask about the dividends policy, and mashallah, you guys concisely split it right. And my CEO is smiling, and all the team here. So, gentlemen and Ahlam, with regard to the dividends, we will never shy away from being positive to the investor and to the market. We'll try to maximize whatsoever potential distribution or dividends, provided that we take the due care of the company. The due care of the company once it comes to the maintenance, that's the first ongoing importance. The second one, once it comes to the growth and the capex that we need to invest in, and the further enhancement that of values that we can create. So we will set aside the reserves required for those parameters. And then whatever the delta, once it comes to the Q4 results, we'll deliberate with the board. And the board themselves, you understand, if it is not fruitfully utilized and there is no requirement of the company, we come to the market to keep another nice smile on the faces of the investors and the analysts themselves.
Right. And in the same, since we're discussing this, and you're looking at this deposit, that you have around 45 paisa per cash per share on the balance sheet right now, you're debt free, and you're generating close to 50 to 60 paisa. In terms of the next 3 years, you were answering Nitika's question saying that you're expecting capacity utilization is close to 100%. Do you see any sort of greenfield project that's coming up from your side to add capacity? I know Dukum was considered in the past, but you shelved that plan, because other than a large capacity expansion, you really don't have need for much cash in your company, because you're running such a tight, operation. So I'm just wondering where, all this cash that you're generating, all the cash that you're sitting on, what are you going to do with it?
See, gentlemen, if you are asking me to confirm a specific full cash out to be distributed or as a dividends, then I refrain from a statement here. But I'm trying to handle your question in a very right approach. If you get to see, once it comes to the distribution, our cash available, it has already been meant to service specific strategic initiatives on the alternative fuel. And we are keeping it there available. If the progress and we sign this shareholders tag along to move on this specific major project in the alternative fuel, then that specific money, I would call it significant portions out of it will be funding the equity partnership side or injections to that specific project. Yes, we have not had any loan in the previous period. Unlike the previous 2023, wherever we had this specific 30 to 40 million from the market, and then we just prepaid before the acquisition, or once the acquisition happens, we will maintain our kind of capital structure once it comes to our balance sheet or even the projects with a mix of debt and equity. And that is to come once we immediately embark on the projects. The only thing that we are working on this due diligence, the processes, the issues of getting the shareholders across. Once this is confirmed, we will give you more highlights. We cannot speak about how we can mix the debt to equity. We have our own proposal, which is ready to go, and we are waiting only for the final confirmation on this specific initiatives on this major projects. So rest assured, whatever left with no required for companies forward growth or internal working capital and requirement, then we will look into how we can keep nice smiles on the faces of the stakeholders. Clear?
Thank you very much, Fatih. I appreciate the answer. Thank you.
Anytime.
Thank you very much.
Anytime. Okay. And Mukesh, also you are raising your hand again, or that's previously? And I believe Alan was talking at that time, but I couldn't hear. Alan? I cannot hear you. If you are speaking, you are not speaking. Okay, any others? So, gentlemen, young ladies and gentlemen, if there is no further questions, we are available to be reached at those contact levels. And please feel free to even reach me if you need any clarification, or the treasurer or the investor team. and we are available around the clock for your clarification and attendance. With that, I will say thank you and all the blessing. Hopefully, the rest of the year will be quite sitting in a very peaceful mind for all the practitioners, the players, the investors, the manufacturers, and the whole societies, countries, and the globe. Any geopolitical distress might land differently on the supply chain, might impact all players, but we pray to Almighty that we continue to be safe, continue to operate, to deliver value at the maximum level. With that, I say thank you and have a great day. Yeah.